Hello everyone, welcome back to the channel. I'm your favorite financial bestie, Alex. Today we're dissecting a stock that's more dramatic than a Netflix series. Figma, ticker FIG. Remember when it IPO'd back in July? The scene was absolutely insane. The stock price shot up from its initial $33 to a peak of over $142. Everyone called it the next tech darling. But guess what? In less than 4 months, the stock price has taken a massive hit, halved to the $50 range. What caused this extreme volatility? Does Figma still hold long-term value? And crucially, should us retail investors buy the dip right now? We're going to break down all the risks and potential rewards today. First, let's look at the rapid ascent and descent. Figma's initial spike was fueled by two things: scarcity and the powerful AI narrative. At the time, any company doing cloud, real-time collaboration, and AI integration was considered gold. But once the hot money pulled out, investors started thinking rationally about the valuation. The biggest risk looming over the stock price right now is the Lock-up Expiration Date on November 7th. This is when the shares held by company insiders, employees, and early VCs who bought in at super low prices are finally free to sell. They bought at $33. If they decide to cash out at $50 or $60, that could unleash enormous selling pressure onto the market. That's why the market is holding its breath. This current trading range, it's the calm before the storm. Now, let's put short-term drama aside and look at Figma's true long-term value. I truly believe Figma is not just software. It's a revolution in design collaboration. The traditional workflow is clunky, but Figma built a perfect closed-loop ecosystem. You start with FigJam for brainstorming and whiteboarding. You move to Figma Design for the actual interface creation. And the coolest part is Dev Mode, which instantly converts designs into developer-ready code parameters. They're also deeply integrating AI to become the gateway for AI-native development. This one-stop service, from idea to delivery, is their strongest competitive moat. Excellent product naturally leads to great numbers. Figma is an elite SaaS performer. Their revenue growth is stellar at 41%, and their customer stickiness is insane. Net dollar retention, NDR, is 129%. They boast an impressive 90% gross margin, making them a literal money printing machine. Plus, they are a hyper-healthy net cash company, sitting on $1.59 billion in cash. But hold up, time for the cold shower. Figma's valuation, or EV/sales, is currently around 28 to 29 times. Do you know how crazy that is? The median EV/sales for the entire publicly traded SaaS sector right now is roughly 6 to 7 times. Even for the best performing high growth SaaS peers, valuations typically range from 10 to 15 times. Figma's 29x valuation has priced in several years of hypergrowth. The market expectation is succeed or bust. Any slowdown will trigger massive selling. This is the biggest risk we face. So, should we buy? My conclusion: long-term thesis holds, but be cautious short-term. If you are a long-term investor, it's worth monitoring. But this is not the right time to rush in. I recommend waiting for the lockup selling to subside before you consider dollar cost averaging. Let's look at the technical levels. The $54 to $56 range is the current short-term support platform, S1. If the lockup causes panic, our panic buy defense line, S2, is at $48 to $50. This could be a solid technical entry, but always use a stop loss. Our first rebound target, R1, which signals market confidence, sits at $68 to $70. To summarize, Figma is no longer just a design tool. It's an AI-powered ecosystem. The challenge now is transitioning from a hype machine to a stable giant. What do you think? Can Figma overcome the lockup challenge and live up to its 29x valuation? Let me know your thoughts in the comments below. If this video helped you, please like, share, and subscribe to the channel. Hit that notification bell so you don't miss my next deep dive on Figma's Q3 earnings. See you next video. Bye.